Hello, my name is Phil Richards, and I head the financials team across EMEA at Bloomberg Intelligence. We have a report out recently looking at the European corporates' capital allocation plans for 2025. So what does that mean? First of all, it's not just financials, my coverage, but actually corporates across the whole market and look at their outlook, what they expect to come through this year. Therefore, we're looking in detail at M&A, what acquisitions we expect, dividends, and share buyback. Now, most of the research we write on the terminal is shorthand, keep it concise in nature. But since the last 2 years, we've also been doing what we call these deep dive reports, where we look into a certain topic in much more detail, and much more in depth. And I think this is a great topic for that. So it's not on one sector. This actually report expands 18 different sectors across the European markets. And also it's a big theme, obviously shareholder payouts, what we expect for the year, dividends, share buybacks, and also the whole idea of what M&A activity we expect across the sector to come through this year, and say times that by 18 different sectors, and obviously a lot in the report. So what are the results? What did they tell you? Well, first of all, if we look at the chart you can see here, what we're showing, we asked each of the analysts and across the 18 different teams for 5 different metrics on balance sheet strength, on M&A acquisitions, domestic and cross-border, dividends, share buybacks, and whether you expect more, the same, or less than what we've seen over the last year or two. For example, balance sheet strength, obviously being helped for all corporates from lower interest rates across Europe, and that's really been a positive, and therefore most analysts reporting actually balance sheet strengths are stronger. They go entering 2025 in a good, strong position, certainly versus where they've been in the past, and therefore that's really driving a bigger increase in payouts to shareholders. And if you look at the right-hand side of the chart, you can see dividends and share buybacks. A vast majority of our sector teams expect more of each of those to come through this year versus the last couple of years. Acquisitions is a more neutral colour. Some expecting more, some less, but still positive overall. Certainly more sectors expect M&A to continue to pick up. But we have seen a number of deals, more in the US than in Europe, but they are picking up in Europe too. And our analysts expect that to continue. Also, if we dive into that a bit more detail, you can look at the 18 different sectors and then where they each expect those different payout levels to go. And again, we show you can see much more of green in terms of red on the chart. Dividends, buybacks really standing out, expect to be very strong coming through this year. My sector, banks, the top line, give an example, their balance sheet strength is very strong. The bank's actually overcapitalized today. Acquisitions, yes, we expect more, but it's a bit of a cautious. Certainly on the domestic side, we've seen a lot more. Cross-border deals, we haven't yet seen any big deal. UniCredit are making approaches to Commerzbank, so there's potentially one there. But there is also even a domestic angle there in terms of an overlap of German franchises. So yes, more M&A, but at the moment, more domestic. Dividends more neutral for the banks, unusual. Most sectors actually expecting more dividends. The reason for the banks, of course, is lower interest rates, and that's causing a drag on profit. And so the banks are likely expected by us to be more cautious and continue that about 50% payout ratio that we've seen over the last 2 years, whereas earnings growth is expected to be largely flat. However, because the banks are well capitalized and there's low growth, they've got nowhere else to invest it, buybacks are rising. As an example, a couple of charts that we show in the report overall, I won't go into too much detail. For example, here what we show is those capital return plans for the European banks over the next 2 years. A huge 200 billion is expected to be returned to shareholders. And you can see that ranges somewhere between 15 and 30% of those market cap for all these various banks. So huge levels of both dividends and payouts overall. And lastly, another key theme across the sector at the moment, as I mentioned earlier, is M&A. And what we show here, the top 25 banks globally. You can see only 2 of those are European when it comes ranked by market cap. And actually none of them are in the Eurozone. And that's obviously been noticed by the European banks, CEOs, and they're looking to expand, wanting to be able to compete on a more level playing field with the US or the Asian peers. And that's one of the reasons why we expect that M&A pick up overall. Of course, much more in the report, and please feel free to get in touch. Thank you.